Today we are diving into one of the hottest trends in the market, which is artificial intelligence. We will dive deep into two popular AI ETFs, BOTZ and THNQ. These days, artificial intelligence is revolutionizing industries across every corner, and you don't want to miss out on this boom on the stock market. With so many investment options out there, this video will help you choose the right investments. Stick around as we explore two of the best ETFs to buy for AI stock exposure that can supercharge your portfolio without breaking the budget. So let's get started. Welcome back to the channel. Thank you again for joining me today. I am Pankaj. As always, everything shared in this video is for informational purposes only. Investing in artificial intelligence can be a game changer for your portfolio. Instead of putting all your money into a single stock, ETFs or exchange traded funds offer a smart way to gain diversified exposure to the AI sector. So let's dive deep into these two popular AI ETFs, BOTZ and THNQ. They are some of the top AI ETFs you should know about. First up is Global X Robotics, an artificial intelligence ETF with ticker symbol BOTZ. Global X Robotics, an artificial intelligence ETF, focuses on companies benefiting from the increased adoption of robotics and artificial intelligence. This includes sectors like industrial robotics, automation, non-industrial robots, autonomous cars, and many more. We will analyze BOTG cost, expense ratio, its top holdings, its sector allocation, and finally the performance. When we look at BOTG cost, it's like 100 shares of BOTG cost just over $3,100, giving you exposure to a diverse range of top-rated AI stocks. In contrast, 100 shares of Nvidia would cost around $12,000 and limit your exposure to just one company. So it makes sense to get a diversified exposure in various AI-focused companies. Further, when we look at BOTG top holdings, it includes companies like Nvidia, ABB, Intuitive Surgical, Keynes Corporation, and many more. This mix ensures you're investing in both established and emerging leaders in the AI and robotics sectors. When we look at BOTG's sector allocation, approximately 40% of BOTG is invested in industrial robots, 25% in healthcare robotics, and 40% in non-industrial robotics. This diversified allocation helps mitigate risks while maximizing exposure to growth areas within AI. When we look at BOTG performance, the BOTG performance over the past 5 years looks impressive. BOTG has delivered an almost 60% return, showcasing its strong growth potential in the AI sector. If we had invested $10,000 in 2019 in BOTG, today it would be almost $17,500 with an average annual return of almost 12%. The next ETF is Robo Global Artificial Intelligence ETF with ticker symbol THNQ. The Robo Global Artificial Intelligence ETF invests in companies developing the technology and infrastructure that enable artificial intelligence. This includes sectors like computing, data cloud services, and companies applying AI in various fields such as e-commerce, healthcare, and business processes. THNQ Holdings offers exposure to 64 companies, including giants like Nvidia, Microsoft, Palo Alto Networks, Cloudflare, Datadog, and many more. THNQ top holding companies are leading the AI revolutions, making THNQ a solid choice for those looking to invest in the infrastructure behind AI. When we look at THNQ sector allocation, THNQ has about 35% invested in technology infrastructure, 30% in AI applications, and 25% in enabling technologies. This broad allocation ensures you are not overly exposed to any single industry within AI. Further, THNQ performance is really impressive. THNQ has seen an impressive average annual return of almost 14% over the past 5 years. If we had invested $10,000 in THNQ 5 years ago, it would have been almost $17,500 today, reflecting the robust growth in AI and technology sectors. Let's check the comparison and contrast between these two ETFs. When we look at diversification versus cost, both BOTG and THNQ provide excellent diversification across the AI sector, and they have the same expense ratio, that is making both of them a potentially better immediate buy. When we check their sector focus, BOTG leans more towards robotics and automation, while THNQ covers a broader range of AI applications, including cloud services and cybersecurity. From a diversification perspective, both of these ETFs provide a great coverage, and hence it would be a great idea to hold both of them in their portfolio. When we look at their holdings by sector, we see that BOTG has almost 44% presence in technology, and THNQ has almost 77%. BOTG is industrials heavy with almost 40%. They both have investments in healthcare. BOTG has almost 14% in healthcare, whereas THNQ has 6%. When we look at their current valuation, BOTG appears more attractively priced at the moment, whereas THNQ might require some patience for a better entry point. The last trading price for BOTG is almost $32 and for THNQ is almost $45. We have talked earlier Expense ratio is same for both of them with 0.68%. BOTZ has almost $3 billion assets under management, whereas THNQ has just over $140 million assets under management. So to conclude, investing in AI through ETFs like BOTZ and THNQ offers a cost-effective way to gain broad exposure to this transformative sector. BOTZ provides a more immediate opportunity with its lower current pricing, while THNQ is a stronger contender if you are willing to wait for a dip. Both ETFs complement each other to build a strong AI and robotics sector portfolio. Remember, diversifying your investments and timing your entries can make a significant difference in your portfolio performance. Keep these ETFs on your radar and consider how they fit into your overall investment strategy. That's all for today's video. If you found this information helpful, don't forget to like, share, and subscribe to Grow Wealth Insights. Comment below with any questions or topics you want us to cover next. Until next time, happy investing.